The year is 2025. The global trade landscape is in turmoil. The United States, under renewed pressure to protect domestic industries, has imposed a new wave of tariffs. These tariffs, aimed primarily at China, Canada, and Mexico, have ignited a series of retaliatory measures. This has plunged the world into a complex web of trade wars. The stated goals of these tariffs are manifold. The U.S. seeks to reduce its trade deficit, discourage the outsourcing of jobs, and protect its industries from what it deems unfair competition. The U.S. argues that these measures are necessary to safeguard American interests. However, critics argue that these tariffs are protectionist and counterproductive. They warn of a global economic slowdown and increased costs for businesses and consumers. The situation is further complicated by the fact that these tariffs come at a time of already heightened geopolitical tensions. China, the world's second-largest economy, has not taken the U.S. tariffs lying down. In a tit-for-tat response, Beijing has slapped tariffs on a range of American goods. These include key exports like soybeans, automobiles, and machinery. The move is strategically calculated to inflict maximum economic pain on key U.S. sectors. Mexico and Canada, both key U.S. trading partners, have also retaliated with tariffs of their own. Mexico has targeted agricultural products and steel. Canada has imposed tariffs on U.S. consumer goods and aluminum. The escalating trade war has sent shockwaves through global supply chains. Businesses are grappling with increased costs, disrupted logistics, and uncertainty. The impact of these trade wars extends far beyond the borders of the countries involved. Global supply chains, intricately woven over decades, are being disrupted. Businesses are facing higher costs, delayed shipments, and reduced profits. Consumers are also feeling the pinch, as the prices of everyday goods rise. The International Monetary Fund has warned that the trade war could shave off a significant percentage point from global economic growth. The situation is particularly precarious for export-dependent economies which rely heavily on open trade. The tariffs have also strained diplomatic relations between the U.S. and its trading partners. Trust has been eroded, and multilateral institutions like the World Trade Organization are struggling to mediate the disputes. The future of global trade hangs in the balance. If the trade war continues to escalate, it could have severe consequences for the global economy. Businesses may be forced to relocate their operations, leading to job losses and economic disruption. The tariffs could also fuel inflation, eroding consumer purchasing power and further slowing economic growth. However, there is still hope for a diplomatic resolution. All sides have an interest in finding a negotiated solution that addresses their concerns while preserving the benefits of free trade. The stakes are high, and the world is watching closely to see if cooler heads will prevail.